Hello and welcome to Markets View at Deven Choksey, the daily market podcast where we decode the Indian financial markets. It's 27th of December and let's get started with the global cues and understanding what's happening in the global markets, how the GIFT Nifty has started, and then deep dive into the domestic markets. Taking straight to the GIFT Nifty is trading higher, which is indicating a gap up start for the Indian markets. However, the Asian markets are also trading higher, where Hang Seng is up nearly 1%, Nikkei is up more than 1%. The Chinese online gaming stocks rebound after regulators' assurance on new rules. So stock-specific movement also witnessed, and pockets are also there, which are creating action in the Asian markets. Talking about the US markets, the US futures marginally are trading lower after cash market ended in the green. US markets ended higher to kick off the final trading week of 2023. Of course, the US markets are in the vacation mode, and since it being a holiday, there will be no cues which will be witnessed. But if we see the last trading session was quite action-packed. Both Dow and S&P were up around 0.4% each. The latter is within 0.5% of its January 2022 closing high. All three US indices are on the track for monthly, quarterly, and annual gains. The US 10-year yield hovers around 3.89% as investors mull key economic data. Crude is up 2%, Brent near $81 a barrel amid Red Sea vessel attack and rate cut hopes. So this is how the global sentiment looks like, where the GIFT Nifty is trading higher, the Asian markets are higher. Of course, cues are not coming in from the US markets as the US markets are in the vacation mode, but the global setup looks quite interesting. Let us take a look at the trade setup for today now. Taking the cues from what happened yesterday during the market session, the market is expected to remain range-bound even today with positive bias, with the Nifty 50 facing hurdle at 21,500 to 21,600 on the higher side and taking support at 21,200 to 21,000 levels in coming sessions, while the volumes is expected to be low given the holiday period. The benchmark indices continued their upward momentum for 3 days in a row, and on December 26th, that is the yesterday's session, the Sensex did climb around 230 points to close at 71,337, while the Nifty was up around 100 points to close at 21,441 and formed a bullish candlestick pattern. Overall, the Nifty has now retraced a good portion of the significant losses seen last Wednesday. The Nifty would need to cross the recent highs of 21,593 to reverse the current downtrend. Crucial supports to watch for re-emergence of weakness are at 21,329 to 21,232. I repeat, 21,329 to 21,232. In the upcoming sessions, around 21,550 to 21,600 range are critical, representing a formidable resistance formed by the reciprocal retracement of the October decline. As we approach the close across various time frames, the prevailing sentiment is optimistic, of course, and as we see, there's a lot of action we have seen, and 2024 is also going to be a lot of action packed in terms of economic indicative actions, triggers, election, all of it during the year. The next few sessions could be crucial, especially within the year ending approaching, and it might be prudent for investors to secure timely profits before the start of the new calendar year. The India VIX, known as the fear indicator, did rose 7%, and remember, we kept on telling you even in yesterday's session that India VIX, the volatility index, is a concern. Again, as we see, it is rising around 7% to 14.68, giving some discomfort to the bulls. So clearly keep an eye on the volatility. So this is how the picture of the markets looked like yesterday, and taking the cues from what happened yesterday, let's take a look now at the key support and resistance levels for today. Taking a look at Nifty is likely to see immediate resistance at 21,455 followed by 21,507 and 21,564 levels, while on the lower side it can take support at 21,360 followed by 21,325 and 21,268. Talking about Bank Nifty, yesterday the Bank Nifty also supported the market, rising 233 points to close at 47,725 after a day of correction and formed a bullish candlestick pattern with sizable upper and lower shadows on a daily chart. Bank Nifty failed to sustain above 48,000 level in the last 6 trading sessions, and a strong close above 48,000 can lead to momentum picking up in Bank Nifty. Considering the levels, Bank Nifty is expected to see resistance at 47,764 followed by 47,922 and 48,085 levels. While on the lower side, it may take support at 47,495 followed by 47,394 and 47,232 levels. So these are all the important support and resistance levels for both Nifty and Bank Nifty. Let us now quickly take a look at the stock-specific news, the stocks and news for the trading session today. We start with Kansai Nerolac Paints, as the paint manufacturing company said that the board of directors has approved a proposal for entering into the agreement for sale with Aethon Developers, the subsidiary of Runwal Developers, for the sale of his land parcel at Lower Parel, Mumbai for 726 crore. Accordingly, the company has entered into an agreement for sale with Aethon. The next stock in news is Aditya Birla Capital, as the company has made investment of 850 crore on a right basis in Aditya Birla Finance and 50 crores in Aditya Birla Capital Digital. Post the said investment, there is no change in the percentage shareholding of ABCL, and both ABCDL and ABFL continue to be wholly owned subsidiaries of the company. Keep an eye on RBZ Jewelers, as the Ahmedabad-based jewelry retailer will list its equity shares on 27th of December, that is today. The issue price has been set at 100 rupees per share. Happy Forgings, another one which needs to be considered as the forging and high precision machined components maker, will be listed on the BSE and NSE today. The final issue price is 850 rupees per share. One should keep an eye on Zydus Life Sciences, as subsidiary Zydus Healthcare has received an intimation from the Income Tax Department determining income tax demand of 285 crore for the assessment year 2023 to 2024 while processing the return of income of Zydus Healthcare. The company strongly believes that once the rectification will be made, the entire demand will be deleted. So these are all the important stock-specific news and stocks which one needs to consider. Taking a look at the FIs and DIs data, the foreign institutional investors net sold shares worth Rs 95 crore, while domestic institutional investors bought shares worth Rs 167 crore on 26th of December. So this is how the trade setup for today looks like. With this, we come to the wrap of our podcast session for today. As we always keep saying that the market conditions can be volatile, and as we see, we are nearing the end of 2023, and hence there's less of action which has been witnessed from the global market. So there's muted action which will be seen in the domestic market always as well, because of the less of action which we see from the global markets coming in. Of course, this is for some time, and as we see, we are entering into the new year, and once we enter the new year, again there's going to be a lot of action. There are going to be a lot of domestic triggers as well as global triggers which we will be witnessing. Nevertheless, irrespective of the market conditions, as we always keep saying, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you're done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.